We are moving towards a place that could potentially reshape the way of life that people in this country are accustomed to. Different existence if events unfold as I anticipate. Since the end of World War II, there has been one Tier 1 reserve, and that has been US dollars and US treasuries. A one reserve is considered a riskless asset by central banks. Suddenly, out of nowhere, the BIZ Bank for International Settlements, often referred to as the Central Bank of Central Banks, made the groundbreaking decision to reclassify gold as the world's only other Tier 1 asset. Let me reiterate this slowly. The world's only other Tier 1 reserve asset. Now, let's examine the 3 years leading up to this pivotal reclassification. Does it make sense that the Bundesbank made a significant deal about repatriating its gold? Does it make sense that Germany, Austria, Hungary, Poland, Czechoslovakia, and many other Eastern European central banks began repatriating their gold and embarked on a gold buying spree 2.5 years prior to the BIZ's announcement of its reclassification as Tier 1? Or does it seem more plausible that the BIZ quietly, to their member banks, outlined a roadmap of what lay ahead? Change is undoubtedly on the horizon. The Bank for International Settlements, BBS, has reclassified gold as the world's only Tier 1 asset, marking a momentous shift. Andy Schectman suggests that the BIZ may have discreetly guided banks to accumulate gold, foreseeing its central role in the future. In 2020, Andy Schectman claims that banks began massively accumulating gold again, while the International Monetary Fund, IMF, indicated a need for a new financial system reminiscent of the Bretton Woods Agreement after World War II. These events, according to Andy Schectman, indicate an expanding role for gold in the global financial landscape. Fast forward 60 to 80 years, there is a global call for a new Bretton Woods-style financial system. The IMF has officially voiced support for this shift. In 2020, a remarkable development occurred in the commodities market, particularly the COMEX exchange. Traditionally, the Commitment of Traders (COT) report featured 2 key player categories: commercial banks and hedge funds, often referred to as SPECs. Major banks like JP Morgan, Goldman Sachs, Citibank, and Bank of America played significant roles. However, 2020 saw the emergence of a third group known as the others. These players, believed to be sovereign wealth funds and family offices, disrupted the market by depleting the COMEX of silver and gold in unprecedented quantities. This unexpected development in the exchange raised questions. Representing central banks in a different capacity or closely tied to insider information, as much silver was withdrawn from the exchange as in the previous 10 years, and the amount of gold removed matched the official holdings of the Bank of Japan. This trend persisted, and central banks continued accumulating gold. The sudden appearance of the others on COMEX marked a significant departure from the previous norm, ushering in an era of financial transformation. According to Andy Schectman, there is talk of an upcoming central bank digital currency that might be tied to gold, the world's sole Tier 1 reserve asset. This development has raised several questions for him, and in 1 year, we saw as much silver taken off the exchange as we saw in the 10 years preceding. We saw as much gold taken off the exchange as the Bank of Japan holds in its official holdings. This is a trend that continues to this day. In 2020, the IMF called for a new Bretton Woods. Central banks continued to accumulate gold, and now you have these traders off COMEX who suddenly appeared, which was unprecedented. For all the years I've been reading the COT report, it was just the commercials and the specs every week. Now there are the others, and they are taking physical possession, which is a novel development. A central bank digital currency is on the horizon, and I surmise it might be pegged to gold since gold is the only other Tier 1 reserve asset in the world. Why are all the central banks accumulating and repatriating gold even before its official reclassification? The actions of the others on the COMEX exchange and the IMF's call for a new system add to the intrigue. These puzzle pieces are beginning to come together, even though the ultimate destination remains uncertain. Andy Schectman also shares insights about milestone number 2, which began before 2020 and gained significant momentum that year. He points to the Chinese Belt and Road Initiative, which at the time was not widely understood but deserves close attention. According to him, this initiative represents an incredibly ambitious infrastructure project connecting various regions, including the Old Silk Road, Asia, Africa, parts of Europe, and South America. China's goal is to create an extensive infrastructure network encompassing all 13 OPEC-producing countries. This project involves a substantial portion of the global population and a significant share of the global GDP, emphasizing not only physical connections, but also digital integration. He noted that the demand for silver in this massive infrastructure project was substantial. 70% of the global population in a digital and environmentally friendly framework underscored the crucial role of silver in this context. In 2020, as the others emerged, the IMF called for a new system, and the Belt and Road Initiative gained traction. It became evident that significant changes were unfolding. As 2021 began, Andy Schectman observed a significant gold-buying spree by countries like Russia, Turkey, India, Poland, China, Kazakhstan, Hungary, Thailand, Japan, and Brazil. They all appeared to be accumulating gold at a rapid pace. In 2022, as the custodian of the world's reserve currency, Andy Schectman believed it was not the role of the United States to dictate who could use it. However, he pointed out that the weaponization of the US dollar had led many countries to seek alternatives for clearing transactions, bypassing the SWIFT system. Notably, China and other nations consistently sold off their treasuries, raising questions about the reasons behind this shift in their behavior. Andy Schectman suggested that they might be concerned about the possibility of facing similar circumstances